Hi everyone, welcome to the session. In this session I'm going to discuss about accounting rate of return or ARR. This is one of the investment appraisal techniques along with other methods. So now let's look at what is ARR and how do we calculate ARR. Accounting rate of return or average rate of return is calculated by taking into account average annual profit and average investment. So when you identify the average annual profit divided by average investment times 100 will give you ARR or accounting rate of return. This is also known as return on capital employed or return on investment. Let me take an example to demonstrate how to calculate or how to identify accounting rate of return. A company has a target accounting rate of return of 30% and is now considering the following project. A company has a target accounting rate of profit of 30%. Now you are given the following information. The capital cost of the asset is $1 million. Estimated project life is 3 years. Estimated profit after depreciation is also given year 1, year 2, year 3, 100,000, 200,000 and 300,000. The capital asset would be depreciated over its project life and will have no residual value. So what is required? Calculate the accounting rate of return of the project and state whether the project should be undertaken. Now there is a criteria. What is the criteria? The calculated ARR should be above 30%. If it is above 30%, the project can be accepted or project should be undertaken. Now in order to calculate, first of all you need to identify the average annual profit after depreciation. Since you are given the profit after depreciation, it's a matter of taking the average profit from these 3 years profit. Then you need to identify average investment. Okay, now first of all let's look at how to calculate average profit after depreciation. Average profit after depreciation, you are given from year 1 to year 3, 100,000, 200,000 and 300,000 US dollars. Now simply take the total of these 3 years profit, which is 600,000, divided by the number of years. That will give you the average profit of 200,000. Now we have identified average profit after depreciation. What is the other component of ARR? Average investment. So how do you identify average investment? Which is the initial investment 1 million. The scrap value is nil, zero value. So average investment is calculated by taking into account initial investment and scrap value. Initial investment plus scrap value divided by 2 will give you the average investment. Now the initial investment is 1 million. Scrap value is 0. So therefore the average investment will be 500,000. Now we have identified both the average annual profit and average investment. Now let's identify the ARR. What is ARR? So ARR is equal to average annual profit after depreciation. We calculated $200,000 and average investment was $500,000. So times 100%. So that will give you ARR of 40%. Now, should you undertake this project? So what is the criteria? The calculated ARR should be higher or greater than the target ARR of 30%. So which is higher than the target ARR. So therefore this project should be undertaken. So as the project yield above the target ARR of 30%, the project should be undertaken. So let's say you are given a mutually exclusive projects. The ARR method of capital investment appraisal can also be used to compare two or more projects which are mutually exclusive. So you can calculate, if you are given mutually exclusive projects, if you calculate ARR, so you can make the decision. So how do you make your decision if you are given mutually exclusive projects? So it will be based on the project which has the highest ARR. So you should select the project which gives the highest ARR. So therefore the project with the highest ARR would be selected, that also provided that the expected ARR is higher than the company's target ARR. If you are given a target ARR, so the calculated ARR should be higher than the target ARR. Then you can undertake the project which has the highest ARR, which exceeds the target ARR as well. So this is the criteria or the basis on which you make your decision on mutually exclusive projects. Though it is very easy to calculate ARR, so there are a number of drawbacks, there are a number of disadvantages in calculating ARR. Now let's look at those disadvantages or drawbacks. So what are the disadvantages? The first one is it is based on accounting profit, not cash flows, which are subject to a number of different accounting treatments. As you know, the accounting profits are based on different accounting treatments. So which is influenced by judgment such as choice of depreciation rates and depreciation methods, whereas the cash flows are not influenced by such decision. So this is the first disadvantage. What is the second disadvantage? It is a relative measure rather than an absolute measure, and hence takes no account of the size of the investment. For example, two different projects might give the same ARR on a 100,000 investment as well as 1 million investment. So it does not take account of the size of the investment. So that is the second disadvantage. What is the third disadvantage? It takes no account of the timing of the profit from a project. Whenever capital is invested in a project, money is tied up until the project begins to earn profits which pay back the investment. The money tied up in one project cannot be invested anywhere else until it earns profit. So therefore the management should be aware of early repayment from the investment, so which will provide money for other investment opportunities. So that is a third disadvantage. And lastly, like the payback method, it ignores the time value of money. So what is time value of money? As you know, the money you receive now more worth than receiving it on a future date, because it will lose its purchasing power. Therefore, ARR ignores the real value of each year's profit. So these are the disadvantage of accounting rate of return. So with that, I will conclude my session on ARR. If you have any doubts or if you want to discuss any topics, please leave a comment. Also consider subscribing to my channel. Thanks for watching. I will see you soon with another video. Bye for now.